Okay, so today I want to do the phase 2 of the accounting equations, part 2. Yesterday I did part 1. Make sure you follow through on the YouTube channel, it's there, the part 1 of the accounting equations. Today I want to do the part 2 so that we close up the accounting equations. Okay, so the equation we are working with today is saying assets equals to capital introduced plus retained profits. Okay, so this is supposed to be in brackets, and then plus liabilities. Okay, plus liabilities, that's our accounting equation. This was our number 2, if you remember very well. I worked out the accounting equation number 1 yesterday. Today I want to handle the accounting equation number 2, how to go about it. Okay, so let me just read the question quickly that we are working with. So this question is just a continuation from the first equation question that we solved yesterday. So the question reads, on your third day of business, you sell, you have a successful day and you sell all your vegetables at 500 kwacha. Okay, so for this video to make sense, I'm sure you should have watched the other video clip that I dropped yesterday. So I'm just doing a continuation for the sake of time. So we are saying on the third day, you've sold your vegetables 500 kwacha. 500 kwacha sales. Okay, 500 kwacha sales. So now we want to reflect how our accounting equation will look like. So our accounting equation, the one on top here, which is saying assets equals capital introduced plus retained profit plus liabilities. So on our assets, we are saying it's going to be like this: capital plus liabilities, right? Plus liabilities. Okay, so our assets, we still have a table that we are still using in business. We haven't sold it, and we are saying its cost is 600 kwacha. And now our vegetables now we've sold them, so we have 0, and now we only have other assets in form of cash, which is amounting to we had the third kwacha in the bank plus the third kwacha at hand, and then we've sold our vegetables according to the question saying 500 kwacha. So meaning now cash we have in total of this amount 500 plus 30 plus 30, which is 560. Okay, which is 560 kwacha. That's what we have in form of cash. And then under capital, we have capital introduced at first. Capital introduced, okay, which was kwacha 1000 kwacha. Which was kwacha 1000 kwacha. And the liabilities, we are saying we still have 0 under liabilities. Okay, so you find that the total on our assets, we are going to have now 600 plus the 560. This will give us 1160. 1160 is what we have now as assets. Capital introduced 600, 1000 kwacha, meaning that from our sales we have made extra of 160. So we are saying now profit retained. There were no withdrawals, that's why we are calling this our profit of 160 retained. It's been kept in the business, so it's profit retained and making our capital increasing to 1,160 as well, and the liabilities 0. Okay, so this is the profit retained in the business. I explained yesterday, if it's not withdrawn, then it will be called profit retained, and it will increase the capital and of course the assets in form of cash, and the table it has come to 1,160 kwacha. Okay, so let's look at the third equation. I'm sure the fourth one you will be able to do it. The fourth one, because I'm sure by then you would have grasped the concept that I'm trying to explain, as in how the accounting equations are introduced. It's just basically the addition of here and here, and the drawings, if they were drawings, you subtract from the capital and you also subtract from the assets. If the drawings was taken from the cash, meaning your cash assets, they've also reduced, then your capital also has reduced. So the most important equation for me is this second one, where you are able to see how this retained profit becomes part of the capital. Okay, this retained profit becomes part of the capital because it hasn't been withdrawn. So your business is growing because you're not taking away the capital that you make. So if the capital hasn't been withdrawn, it increases the business's assets in form of cash, and also the capital itself increases. Okay, so this is how we can reflect these transactions, these items in our accounting equation. Okay, so let's do the final question, which involves the withdrawing of the same profit that we make. Okay, so let's say on the same third day of your business, you decide to withdraw 100 kwacha for your personal use. So we are saying on the same third day, you withdraw the 100 kwacha for other personal use. Let's reflect the 100 kwacha that you've drawn, that you have withdrawn from your business in the accounting equations. Okay, I've tried to work it out for the sake of time. This is how it's looking like. We're saying assets, your table 600 kwacha, your cash, which was 560, is now reducing by 100 kwacha, the one you are withdrawing in form of cash. So under assets as cash, you have 460 now, and then your capital introduced is 1,000 kwacha. Retained profit, you have 160. The drawings, they are going to reflect under capital because you are withdrawing 100 kwacha, and then you're going to have the total here as 1,060. 1,060, the same goes to the assets. You're going to have 1,060 because we are saying the 100 kwacha was withdrawn in form of cash, and your cash has reduced. Okay, this is how you keep on reflecting. If more capital is introduced, you add it in here, and also you add it on the assets here. Okay, if the more capital was introduced, you add here. Under liabilities, you still have 0 because the business hasn't borrowed anything yet, unless it gets a loan, a bank overdraft, or it buys something on credit from the suppliers. That's when you have something on the credit here, on the liabilities here. This is the short explanation I had for today. Hopefully it has added some value. We'll still work out some more. I believe you need more clarity, but this is actually simple and straightforward concerning the accounting equations. Be sure to go through all those accounting equations that I listed Thank you very much for your time, and this video is prepared for Success Knowledge Center. Thank you.